I'd like to start with the NASDAQ, as we did yesterday as well, and it's pretty much in line with everything that we're looking at within stocks. There's obviously some stocks that are outside of the main consensus of the pattern, but those stocks that are out of the pattern will be doing the same thing inside their pattern. So with the NASDAQ here, we've been, same as the S&P, we've been looking for wave 1, an A and a B and a C for wave 2, and then wave 1, and then back for wave 2. So yesterday we were looking for a move to the upside in 3 waves. So let's just go in and check on this. So we're looking for an A, B, C to the upside, and then we're looking for a C wave to the downside. So we can look at it as a bit of equality between the length of wave A and wave C here. So the 12,000 will become a bit of a support area here. Obviously the previous lows and the 100 here will become supporting factors as well. So what we've got to try to do here, obviously we can be in a bearish mindset when we see markets move down this quickly. So what we need to do is we need to, even when the markets land, we don't need to buy the bottom or anything like that, but what we do need to see is a nice move to the upside. Now sometimes you can count the 5 waves to the upside, and sometimes it's a little bit trickier. Sometimes you get this sort of thing, it looks like it's in 3 waves here, and then you might see 5 waves here. So then you can just buy above that, because that 5 waves will take you to the next one. And if you have trouble looking at it, then also have a look at the cash market as well, or some ETFs or other stocks. And I always find it helpful to look around a little bit, because then you kind of get that consensus of what's actually happening. But really, in a way, we're looking for that sort of ABC sort of pattern here, if that's going to play out at that point. Now you can get a smaller version of that. We'll talk about this more in the anyway, this is the basic pattern. Let's just go in and have a look at it with it's the same for the S&P as well here. So with the S&P here, it's a little bit more bearish, but and we knew that we'll be sort of pushing the ropes a little bit, but it'll be down here for that. Obviously, I mean, this particular move up here, we've got as an impulse wave. That's why we're sort of looking at this. But if this low is taken out here, then obviously we'll need to look at all of this as wave 1 and 2 here, and a bigger move to the downside. But I've got a bit of confidence in what we're looking at here with these markets. So let's just go through this. And one of them's Apple. I mean, many of these stocks have got that 5 wave move to the upside, and yeah, so did it take out that top there? Oh, not quite, maybe. That would have been nice if it done that, actually. That would have just helped a little bit, and maybe it has on some markets. Either way, we'll just continue on. So we're looking here, we were looking yesterday, we're looking for the B wave up here, and then we're looking for the C wave that will come down to the 150. Now it leaves the B wave exposed at this point. So the idea with just, talking generally here with all of these stocks is that we got a few positions in early in the piece, and then we look to take some profit off the table, and now it's time to sort of move back in again. Over here we'll be looking for a move to the upside over this point. So yeah, I mean, we still got further to come down here. We've also got some employment figures coming out tomorrow as well. We had jobless claims today, which, there was more people claiming for jobs, wasn't there? So even though it's a bad thing, that's a good thing, isn't it? That's what the Fed wants. They want higher unemployment, I think. Something like that. I mean, this is the lowest it's been since the 50s or some crazy thing. But yeah, tomorrow we've got employment situations before market opens, so that will be important at that point. So Yeah, I forgot what I was saying here, but basically, let's just go to the 100 ticks and talk about this. But it does leave this B wave exposed to go long now. But really, we want to be building in here, but we want to build in, you know, on the first impulse wave that we can find here, you know. And it doesn't have to be a full trade. That's the other thing too, because sometimes it's like, you know, am I doing the right thing here, and all the rest of that. You know, we go through doubt on these sorts of things. So the smaller the better. Then it doesn't really matter. Do you know what I mean? I mean, it matters, but not as much. Just trying to think if we can look at this as a bearish count in some way or another. The only way I could see it would be down for one here, an A and a B and a C. I don't have a C wave here either, so I have to look at this as being 5 waves. And it's possible I could go 1, 2, 1, 2, 3, 4, 5 for the third wave, A, B, C for the fourth, or an A, B, C, D, E here for the fourth, and then here. So down for 1 and back for 2, 3, 4, 5. We've come pretty high here, so it still hasn't taken out the top. That's one thing. So yeah, but then again, I don't have 3 waves here. It's pretty clear to me that this is 5 waves up here. So it's difficult to get. You know, I don't mind switching. I mean, I can see the banking sector's weak. You know, and we're using that as a hedge. You know, so. For long positions, but yeah, anyway, let's just go to the 100 here. So this is where we were yesterday. We were looking, let me just get this into the frame properly. So we were looking at with wave 1 here, we're looking for the A wave. We were looking for the B wave, and I had this count here. I was trying to figure out, because of the spike in here and things, about which would be the top, but now that that's clear, that's all good. So it does mean that we can, first of all, go long above the top here, as mentioned. So the trick here is to be able to count 5 waves down here. This will be much the same length as this one, I'd imagine. Yeah, so I always find it's good if it can go below the level, because what will happen here, if I can just draw this out here, it should come down. I mean, there's going to be support at this level too, so it's going to be, 1's always a strong number, and there's lots of support at 2 here, so it's all going to be a little bit tricky, and this may or may not happen, but if it does, then it's useful. If it doesn't, well, then it's okay too, you know. So to come down and bounce off the 150, big number, that's just normal, and it's good if it can come down somewhere down here, you know, a decent move down into 49 or 49.30 or 49.50 or something, and then look for a classic trading levels pattern sitting on top here. Get that first high above the level there, that's the one that you want, and then the second high. And then if you're really keen, then you can build in from that point. Now, if you build in from that point, what you have to do is you have to put the stop under here. And if the market does drop down here again, then you'll be stopped out, and then you'll need to rinse and repeat the same thing as well. A small loss is a good loss. Okay, so and go again at that point. I mean, I wouldn't build in right on the 150 in this case, unless I was coming up here, unless I was moving up, you know, unless I was moving up through it. I would be looking for building on top of the 51 here. That's what I'd be doing, and then I would be looking to put small trades here. I won't be doing this myself, but this is what I would do. It's always the same for me, and yeah, build up that way, you know, because once you basically get from here, wherever that low is in here, right, wherever that low is, I'll just put it on the 49.50 here somewhere, close enough. So that will leave the 61.8% roughly and it was a good thing too, at these old highs here. So that means that number's 53. So if you get support on this one here, this is with the classic trading levels pattern, then you can put in a full trade on that side of it over here, but you need that first high above the level, and you know the pattern here. Squash that up there. So the arrival at top of group 1, the arrival, the reaction, the first high above the level, yada yada yada. Start from the top, work down. You may get a different pattern. If it's bullish, it might be like that, but it doesn't matter. You still got the top here, and you got the second top here, and the final move here is that it doesn't stop at the level here, and you go, oh shit, what's going on? Well, you just let it go, and it will run out of steam, and then it will fold back, and you start from the top and the next top and the next top, and then you'll eventually get it. So especially if you're trading leverage products as well, because time is money, and so the timing is, you know, really important in all of, you know, in trading, of course, you know, time is money, and so on. So yeah, I'll just clean this up because it doesn't stay there when I close the program. Anything beyond this side of the price gets all squashed back up here on tick charts anyway. So yeah, so this type of thing is really what you need to be doing in most situations. So start small, look for the closest largest number and build in there, you know. And once this low, let's just say we got it completely wrong. So this move comes down into 59 here, and then it moves up here, and you think you're on the right track, but then the market drops down at this point here. Well, then that would be the point to short at, because that point we would be wrong at that point. Okay. So we know that this length here is the same as wave A. It's all good. It may not reach the 50, it may not reach 59. It may just pop down through the 51 to 50, 150, 50 or something like that. Do you know what I mean? And then move up. Then you'll have to build it on 2 and then 3 on that point. So it could be a bit shorter than this one here. Yeah, all of these things, you know. But you need to sort of like recognize the turn as such. Okay, so Amazon, the same as well. We've got this wave 1 here with an A wave and a B wave, and then we're looking down for the C wave here. Obviously, we're coming into the third waves normally come around the bottom of the previous move, and going to the upside, third waves would normally be around the top here. So if we're counting this as bullish, this would be 1, 2, 3 here. No point in going long here, because if this was a third wave, there would be a fourth wave here, and then a fifth wave to the upside, then the ABC pattern. So you've got to wait for it to come to the other side, you know. So yeah, once again here, we just need it to land. I mean, we're deep in the third wave now, so it's going to be, you know, I'll just draw this here. It'll be something like this here, and then you need that first, you know, thing here above the level, and that's where you need to go long at this point. We can just bring that down to here. You could also, with this one here, is add on 94, put a line at 94, and then build on another small position on here. So yeah, I mean, using this ABC is really good because, first of all, when you put the trigger here, your stop's got to be under here. That's how you set it up. Once that's triggered, right, then you can lift it up to this point. And then what that does is just it doesn't half the risk, but it reduces the risk, you know, because the idea is to somehow in the first instance is to reduce the risk, then to get it to break even, but you don't want to move it too quickly either at this point. So this number's 3 here, so you can't really move your stop until you get to the next level. So the next level will be 5. So number 5 has got to become you're going to get some other little pattern here. You know, it could be like this here, or it could sort of come up and come back and all those sort of things. But once you can see that it's secure at that point, so it's a little bit secure here when it takes out the top here, then you can lift your stop to this point, you know. And then you have to leave this. If you're going, you know, it takes courage to stay in a trend. The next level here is group 2. So, you know, you've got to get into group 2 before you can move your stop up to the next level. So you have to wait for support on the next level. And if you don't want to wait for support, then you take money off the table, reduce that position size, you know. Anyway, I'm just talking my my waffle. Everybody's different, and you have to find your own way and do your own thing. And but it's okay to, I mean, it's good to collect, ideas from different folks. Everybody's got a good few ideas. I mean, the only thing I've got going for me, apart from my good looks, is the trading levels. That was something that I've added to the scene, and that support and resistance is really good. Supply and demand and volume. It really kind of works well. So NVIDIA is a little bit different here, but it does look. I mean, I can squeeze 5 waves out of here, so I'm going with a bit of a different, bit of a different thing here, but. Just be a little bit careful about this one, because we could get some sort of expanded flat sort of happening here. And what I mean by that is this wave 2 here coming over here for this. So this would be the A wave here, the B wave here, and the C wave here coming down a bit deeper, maybe covering that gap, and then moving off from that point. So that's a possibility at this stage. But either way, the thing about it is because it took out the top here, this is the first one, the NASDAQ didn't take out the top of the previous high. Here's the NASDAQ here, and none of the other stocks that we looked at, but NVIDIA's taken out the stock. So basically it's telling you that it's pretty chirpy, isn't it? It's pretty, it's pretty strong, So we can move this down to the second high here now. You may be able to get another, let's just say that it comes a bit deeper. Yeah, I don't know where it'll come to. I mean, wherever it comes, it will want to come, while the other markets are moving down, it will want to move down as well. This will be wave 1 here, or the A wave. I just don't know how far it'll come. I could count them. But basically what I wanted to say, though, is that a little classic trading levels pattern on top of the 40 is what you'll be looking for to build in here on that, And there will be a lot of fluff around here, so don't go buying above 45. You can buy at 45 on support, but it probably will be tested later on, so it doesn't need to be a big trade. What we want to do is find a classic trading levels pattern on this level here. We're trying to build with all of these markets. If we're on the right side, I mean, there's a strong bearish case, as you know, and it's hard for simple folk like me to go against the main consensus of what's going on in the markets out there, and I could certainly be wrong and make a tosser of myself, but why I'm seeing 5 waves to the upside and 3 to the downside, then I need to stay with the trend, as scary as it is, and continue to build in it, because at the beginning of trends it's tough, it's really tough. So we'll just continue to see how it plays out. Meta platforms here as well. Yesterday we were looking, same thing here, we're looking for the wave 1 with the A and the B and the C wave here, so we'll be back down at 180. Here it's a little bit clearer. It looks, we could have a 1 and 2 here and a 1 and 2, or even to here, but the thing here is that this is all of the third wave here, isn't it? So we're going to see 4s and 5s finish this off here, isn't it? Then we're going to see some sort of rally. So I was thinking here, if you understood we're at 180, so from 150, wherever it is down there, 150, 180, when we talk about 180, we talk about group 2. In this case, it's minor group 2, so 65, 72, and 80, so it's a big haul here. And so we're on top of 180, it's testing that now, and the next level up is 200, and so it's just retesting this number here. That's really all it's doing in the bigger picture. And we've got a little group 1 here of 180, so 1, 2, and 3, so between 80 and 90, the Fibonacci sequence, 1, 2, 3, 5, and 8, and with 8 here we can also look at a little group 2 in here. But what I'm wanting to say is that when we do come down here somewhere and test these lows and so on, the 80, 180, is that we want to look for 183 as a classic trading levels pattern in here. here to get the first position and then put a bigger position on over here. Now you can go long on the 90 as well. There will be a classic trading levels pattern here because it's an old high. Now what we want to do is there's going to be a reaction from the 200, so you definitely want to take some money off the table, and we'll try to put it back in as we go, but we'll get a bigger classic trading levels pattern here. We want to leave some skin in the game because we're looking at a much bigger bullish market, I mean, in a nutshell here, this looks pretty big at this particular point in time, but the swing range for 200 is down to 165 here, the bottom end of group 2. So that's the swing range. That's what a corrective pattern can be at that level. So what we want to try to do is we want to try to sell new highs and buy new lows within this space, but we're not going to be too particular about it. We just want to keep edging our way forward with all of this. So taking money off the table here, and we'll have a look at what pattern comes back, and we might be able to add again here, and continue to work the price and everything that we need to do at that point. But anyway, let's just see if we get our turn here. And also too, once on the bearish side of this, if we count this down here as a third wave coming down, and we get some sort of bounce off here, and it's going to leave this low exposed, so we get a decent bounce back to this consolidation here. Anything below that, and then you'll need to be out of the market at that point, and you'll need to be on the short side, because we'll have to take a bigger view of the market coming down with 1 and 2, and a larger third wave coming back into this space, further down, testing this over here. So this wave C will end up coming over here for that. So we need to know at what point we're going to be wrong. So as with all of them, this move that's coming down here, we can see that it's probably 1 and 2 and 1 and 2, or we could go 1, 2, 3, 4, 5 to here as 1 and then 2. And like I said, it's pretty scary when you see these big moves here, but this will be the end of the third wave at this point, and there'll be a fourth, and then there'll be a fifth here. But once that low's in place, that will be, you need to understand that low basically, and it can come down through the 180 here, to come down to 178 here, whatever that is, but yeah. Netflix, so we're looking at wave 4 with 1 and 2 and 3 and 4 and 5. Because the others are going to come down, we'll have to bring this down a bit further now, because there'll still be some bearish things there. And maybe I've got to kind of do this in a different way as well. I might have to extend it, but maybe I'll need to extend it in having a third wave here with 1 and 2, then, because the third wave's a bit short, so 1 and 2 and 3 and 4 and 5. So we may end up getting a bit more in this one, so 3, 4 and 5 for the third wave, a fourth wave and a fifth wave coming down here, something like that. Do you know what I mean? I'll leave it as it is, but I'll just overlay this this other one here as well. It doesn't really matter. What we want to do is we want, in this particular instance, we want the market to come below this large number, major trading level 3 here, and then we want to find support over here, back on it. So we want it to test lower, check the demand for it, prove to us that it's strong. We want to see some type of impulse wave here. And then we'll look for the setup. So nothing to do here just yet. We'll just, because this one's been more bearish, we need to make sure that we get it right. So there's nothing to do, and you don't want to short it since you've just arrived here either. So rightio. So with Enphase here, we took a bearish view of this here yesterday. And but like I said, I don't know what's right or wrong here with all of this, but what I was thinking is that we will think of it as a bearish move, because it kind of needs to come down to 150 sort of thing, but at the same time, if the rest of the market's going to go up, well, then this is going to go up, isn't it? And we'd look like a fool if we're on the wrong side. So we need, we need to put in our trader's hat and not just choose a side as an analyst. So we know that the move down through here, I can see that this is 5 waves down here. So I could look at this as an A and a B and a C to this point here. I could look at all of this as an A and a B and a C over here. But all I know is that from that top to that bottom, this is the 50-60% mark where it hits supply up here. So if that's breached at that point, then we can go, let's just say that it came down here and then went back up here. Well, we'll need to be long at that point. And then on top of the 30 here, we would also need to be long as well. But we'll need to look for a classic trading levels pattern at that point. I'll just do that first high above the level thing. So a small position here and a larger position here, and then we'll look to build on top of the 250 here, the medium level. So if it does go up with the rest of the markets, then that's what we'll need to be looking at that. That's how we'll look at it. Otherwise, it's going to come down through here. But because I'm a little bit unsure about the count with this, it's not the best 5 waves here. I mean, as I mentioned before, we could end up with this B wave here, which is also a bit small, way over here somewhere. So an A wave here, a B wave here, 1 and 2, and 1 and 2 here, and then 3, 4, and building up here to a larger C wave up here. So I don't know yet. I just don't know what the answer is yet. I haven't seen this green space bottom out. With some of these ETFs and lithium stocks and so on and so on. So they're not there, and we're seeing that stronger US dollar that still needs to continue to push higher as well. We'll see how that goes. Doesn't have to push higher. It could actually have a top in play, but I'm not going to get into that right now with this. We can look at that in one of the other videos, but let's move along. So I don't have any answers for Enphase at this point. Tesla here, we're looking at wave 1 up here with an A wave, a B wave, and then 1, 2. So we're progressing quite nicely. We're in here yesterday. We're looking for some sort of 3, 4. We've got that. So it does give you a little bit of a timing here. So we've got this, and this to go down here for that. So that's going to be under, it's pretty much the same sort of pattern as the rest of, the rest of the market that we're looking at, with the meta stock and all of that. Not meta stock, I keep saying that now, don't I? With meta platforms. And yeah, so I think this group 2 here will hold it quite nicely, the 165 area through here, but anywhere in this particular space. So if you're going to go long here, let's just say that it comes down here. It's going to take another session to finish off in here by the looks of it. But we want that first high above the level here. We want to try to recognize 5 waves up at that point. And if it was going to be bearish, let's just say it was going to be bearish, then this would be wave 1 and 2 here, and all of this here would be wave 3. So this would be wave 4 at that point. So that's a good reason to make sure that we get that right. So if we go to here, the 38.2% is at this wave 4 of 1 lesser degree here. So that above the 180. So that puts us right. So if we just wait for that to move up here, it's either going to be in 3 waves or 5 waves. We're thinking 5, but it could be 3. But either way, once it comes in and around this particular top here, then we can go long above that top, That will be the 38.2%. This wave 4 can come back into that space there as well. Normally they're a little bit lower. But so that's that, and that's the bearish side as well. So we're just waiting for them to land at this point in time. It's still got further to go down. Alphabet here, look for the same thing as well. We're looking for the wave 1 here with the A wave, the B wave, and then 1 and 2. And I could need to adjust this a little bit more, so just be like Tesla as well. Probably need to bring it down into its box here a bit more, and it'll be something like this. So around the 92, 91.50 for that. So yeah, it still needs to come down. Same as Tesla, same thing. But we're on track here as well. So they're all, as you can see, they're all pretty much doing the same. Microsoft here as well. Third wave normally comes in at the bottom. So let me just tidy this up a little bit. Probably start bouncing around there somewhere, I imagine. Let me just have a bit of a look, be something like this. So once again, we need this to land, and then we need to recognize a a nice 5-wave structure. Now the 5-wave structure could be here, could be here, could be here. Whatever you can recognize is important, so there'll be different sizes of things to recognize. But what I was thinking is above the double 5 here, the 55, that would be, say, but if we're going to be here, we want to be able to count 5 waves to that point. Any moves in here earlier, then they need to be smaller positions. And if I was doing it, I'd be looking at group 1 here, and I'd be putting in a very small position at this point. If I could figure out that group 1 had a classic trading levels pattern, and it had, meaning that 253 has got tested support, and then move in on that. So a very small position, because you need to get out of it if it dropped below the 250. A bit unsure about old Birdie here. We've got such a nice ABC correction, but at the same time I can see that this is in 3 waves here, So I'm thinking, do we put the B wave over here for this? And have a look at this as the A, the B, and the C wave here for this. I'm a little bit unsure. It doesn't really matter. We're not ready to move into it. You can buy the new high here if something happens. You can go long at that point, but we're not there. We're not there yet. We'll just see what happens in here. Okay, we'll get a better position on that. And square. So with square, we're looking for wave 1 up here, and wave A here, and A, B, C for the B wave here. And not too sure how to count this down here, but I could probably, this is a bit tricky to see in there, probably 1 and 2 and 1 and 2. Yeah, I'm a little bit unsure how to count this. It doesn't really matter. What we need to do is probably take out this low here, so into the 70 with this, somewhere closer into this point here for this. We'll talk about this in terms of looking for positions here. If this is 1 and 2 and 1 and 2 and 1 and 2 here, because there's overlaps on these, then we need to see this play out in a series of 4s and 5s coming into here. But if that is like halfway through here, that would be half of the trend, so we could say that's half. If they were all 1s and 2s, and now we've got to get 3s and 4s, so then that would be the other side of it. So it still brings us down into the right space here. So nothing to do here just yet with this one. And with the Bank of America here, I noticed Morgan's are pretty soft as well. So we talked about a short here, just bringing the stop to break even. I was just using this as a hedge, and there's a couple of things that could play out here. We could play out with the B here as 1 and 2 here, and then 1 and 2 and coming down for the 3rd, 4th, and 5th here for this. So that would bring us in the 3rd wave play here. So if I bring this down into here for the 3rd, and then the 4th and the 5th here. So if this is 1 and 2, this will be 1 and 2 and 3 here. So that will be, let me just think this out a bit. That will be 1, 2, 3, 4, 5 to here, and then we'll have 4 and 5. That would be yeah, that's about right. We'll just do it how you're supposed to, so we can put wave 3 here. That's what I was sort of thinking, really. So that's 25, that point, 25. So the 3, 4 around the 25, and then down here for this. So possible $20 here. But the other side to this is that we could look at this a bit differently. If we looked at it, let's just assume for a moment that the NASDAQ count that we've got is correct, and we're going to see the markets go up, and then the other markets, you know, like the Meta platforms and so on and so on, all they're going to do is they're going to finish their third wave off, and they're going to have a fourth and a fifth, isn't it? You know what I mean? They're going to have something like that. So this can obviously come down to these lows over here in that sort of space. Now, if the other ones, you know, like the NASDAQ is going to have that, and all those stocks we just looked at are coming into their thirds, they need their fourth and they need their fifths here, then that would be 1, 2 in here. What's that one there? Some other thing, doesn't really matter, we don't need that. So that means that there could be a low at this point. So what would that mean? That would leave this here as an A wave, a B wave, and a C wave here. So that means that this here can be an ABC pattern to here as a B wave, and then have a C wave here, and then come down here, and then move up from that point. So that's also possible. I mean, the reason that I put this out here was a hedge for my own positions, and I've got it to break even now, so it doesn't matter. Do you know what I mean? For me, it doesn't matter. If the others lose, well, then I win on this side of the market, and vice versa. So I'm just locking things up at the moment. So yeah, so we'll see how it goes. But so there's going to be support in the next session or so at these current lows here for this. So we don't need to go to the intraday yet, because I can see that we've got 1 and 2 here, and there'll be 3, 4, and 5. It's at this point here that we can get a change in trend. If I see this move up being corrective, then we'll look at this on the intraday, and then we can just bring the stops down here a bit further and look after that, and we'll see, you know, we could even add to the position if the 30 becomes the retested resistance on the short side here, but it'll probably come back above the level here. This is just a nice, pretty clean picture, and it happens now and again, but most of the time it will pop back above the level, and then we need to go through the motions again over this side with it. So we'll see how that plays out. And like I said, mortgage is the other one that's probably is doing the same sort of thing, and yeah, so we'll see how that plays out. But that's our short hedge at the moment for any longs that you may have in the market. Alrighty, I'm going to leave it at that. Thanks for tuning in. Cheers.